His family farming enterprise in the southwest of England is something he's passionate about. And as an agricultural economist, Charlie previously worked with Rabobank's agri-commodity markets research team in London, where he was responsible for price forecasting and fundamental analysis of global grain and softs futures. So in his role currently, since 2014, specialising in sugar market coverage across Australia and Southeast Asia. Please make him feel warmly welcome.
Okay, good afternoon, everybody. How are we doing? You okay? Had a good day? Yeah, it's been great, and thank you very much for the opportunity to come here today and to talk a little bit about our view for sugar, and right out into the sort of the next few decades, but also looking a little bit more in the nitty-gritty as well in the next sort of 12 months or so. And that's it. Price, trade, and climate in sugar is what we're talking about. And you're probably thinking, well, last presentation of the day, we've got a banker banging on about climate change who's keeping me from the bar, and you're probably getting pretty thinking, what's that going to be all about? But as the introduction went, I'm an agricultural economist. I work for Rabobank, and doing research in the soft space, which includes sugar as well. And really, I guess my job is to make sense of what's happening in terms of global markets and what that means, of course, for Australia and Southeast Asia as well. So that's, I guess, what I've been doing. And today I'm really the spokesperson because, to be honest, we work as a big team right around the world. We have 90 or so analysts just like me in sugar, animal protein, farm inputs, all sorts of different things. We work as a team. We work with our guys in Brazil, Mexico, the US, also in Europe and Asia as well. And so I'm really the spokesperson today, just delivering some of that research that we've been looking at. Now, to start with, I'm going to start quite broad. I'm going to start talking about kind of climate and some of the views that we've been sort of compiling in terms of the broader outlook for cane with climate. Then we'll be getting more onto the nitty-gritty, Thailand trade, market turbulence, what we've been seeing in the market recently, and how long do we expect that to continue? Looking a little bit at the pricing side, and we'll have our price forecast. And then finally, any questions, please do ask. We won't be touching on everything, so hopefully plenty of times for questions. And so when it comes to, I guess, the climate, it's probably one of these things you're very used to hearing about, and as far as, I'm an economist, we look at trends, and I'm not here to talk about, about climate change and the impact, etc., but I'm here to talk about, what it really means for cane, as it goes. And so really what we're looking at is I guess, the change in temperatures over the last sort of 100 years or so, 120. Here is, I guess the correlation, the mean average temperature in across Australia, and then the projections there going forward. And it's fairly concise. We do see temperatures creeping up. Rainfall, a little bit more difficult to decipher, a lot less correlated, and whereas here suggests that mean rainfall is looking to improve over nationally. There's other of course reports that suggest otherwise, and particularly in Queensland, there's sort of outlooks which suggest it's going to be falling somewhat. So looking much more at the temperature is what we have been really interested in. That as well as this, which is the frequency of extremes on the rise globally. So that's extreme weather events. And since 1980, we've seen those extremes quadruple, really, until now. This is a global chart suggesting extremes in climatological, hydrological, meteorological as well, and some geophysical aspects. Now, when it comes to, we've got the map there of Australia, and when we look at northern Queensland, we see that of course the impacts of this part of the world is very much the meteorological. It's in the green. It's the cyclones, of course. Other parts of the world, particularly the US East Coast, we also see that covered in green, higher extremes there too. And the likes of our competitors in in India, Thailand, Brazil, we see more drought impacts and disruption to monsoons, rainfalls, etc. So really that's on the rise when we look out into the sort of 10, 20-year outlook. But we need to, I think, really consider what we're dealing with here, and given that given what cane is capable of, and when we look at higher temperatures, etc., we do actually see that cane is very, very resilient in terms of its ability to adapt to weather. We've been looking here at deviation from mean production over the last 20 or so years. And for wheat, it's ups and downs, obviously drought affected, etc. Barley, very similar. And that one, by the way, is the mean of the 20 years. This is just an index, just showing the variability. If you're in the cotton game, it's you're gonna be facing some pretty variable rates there, really variable production. Of course, if that water isn't in the Murray-Darling Basin, it's gonna be a bit of a challenge. And then we get cane, which sits there well below the remainder. So in terms of its properties against other sectors and other crops, it's very, very resilient in terms of its climate. We've chucked in soybeans there as well, and we see some ups and downs. I think towards 2000s, volumes there, production aren't huge, so I think that provides a bit of some of the volatility there as well. So potentially not hugely sort of relative. And then when we draw that together, we look at the percentage change from the mean over that 20-year period, and we see by far cotton is the most, shows the most deviation, soybeans second, and then wheat and barley together, cane at less than 10% deviation year on year. So hugely resilient there as well in terms of what's happening with climate. Now, this as well, we've been looking at all different studies to sort of decipher what the future could mean for cane with a changing climate. And this is something that really came up that sort of resonated. This was an outlook to 2030 that was brought out in 2008 in a study, prioritizing climate change adaptation needs for food security. And it showed in Brazil that despite all the other grains having negative impacts through a warming climate, actually, sugarcane was the one commodity, the one agricultural crop that was to show actually some benefits through warming temperatures, etc. So I think it's really interesting that we have to have this balanced argument rather than just saying it's going to be bad all the time. Breaking it down into terms of looking into different studies that we've been particularly in cane. In terms of plantings, we do see negatives. We do see negatives potentially to dry plantings, and that could be an issue in cane production. Growth, of course, is where we see the benefits. We see improved temperatures and higher CO2 concentrations potentially making production better. Irrigation becomes a problem, high chances of water stress, etc. And harvest-wise, if we do have drier harvest periods, again, another benefit. But I should emphasize that the two negatives there can somewhat be managed through, of course, through irrigation and water management. So it's really this one here, the second from the left, that we see actually being a really big factor out of those four. So what does this look like when we come to our competitors as well abroad? Well, our competitors are facing similar, in terms of temperature change, but the ability to respond is different. So here we go. We have the chart again for Australia. The temperature's creeping up there. Again, we look at Brazil and we see a very similar trend, and India as well. Again, very, very similar. But the ability to respond is, of course, quite different. If we chuck in Mexico into the mix, we see slightly steeper change there. Thailand a little bit flatter, and I've added Russia just there. It's obviously beet production, but really much higher than in terms of a trend than those other cane producing regions. I didn't put Russia on. Obviously, the means there would be in negative, so it wouldn't. I put it to one side. But really, I think really what I want to emphasize here is that these competitors are facing those similar issues, and how they respond will mark their longevity. Really, we see Australia being very, very well placed to look at some of these adaptations in the long term. This isn't something that's happening overnight, and start to respond to this. I mean, this forum itself is credit to some of these issues, and really, for exporters globally, the success will be determined by their ability to respond and who responds best. So that's kind of what I wanted to talk about really when it came to climate and what we see, I guess, as a longer term outlook, not all potentially negative. And now I'm going to get on with the real nitty gritty stuff, the pricing, the outlook, and what we see going forward in the 12-month period. So to start with, I mean, this is probably a chart that has pleased many of you. You've seen that the price has risen quite sharply And there we are in the long term, the 20-year chart, we're getting prices above 500 Aussie dollars per tonne. Now that is a swap price. So it's depending what product you're using, but that is a swap price of 500 Aussie dollars per tonne, and getting well above, of course, the 20-year outlook, but also then above the 10-year as well. And we're looking at the highest levels since March 2017 here, which is a really sort of great sort of aspect after over 2.5 years of low volatility, low pricing. It really makes a change. Now the big question I get asked, or we get asked, is how long is this going to last, or will it last? Is it just a spike? Well, actually, there's sort of two reasons to that. One is when we look at the supply and demand, we see part of that reflected here. But actually, the news headlines over the past few months or weeks, have also contributed to this spike. But in short, we do see sugar becoming in shorter supply in the next 12 months or so. So actually, yes, fundamentally, there is a reason that we are seeing prices move higher. And really, we are in a new environment. Going back to sort of the 380 mark is something that we see a very, very slim chance of. Here in 2017-18, we had that big global surplus. You see the bar there. The next year, we had very much a balanced year, and so still those heavy stocks were there. Those heavy stocks, very much a buyer's market, a lot of sugar available. But it's this year that we start to see that change. We're moving into that 8.2 million tonne global deficit. Suddenly, global stocks are eroding by that same amount, and suddenly the market needs to pay to draw sugar. It needs to pay. The sugar's not just there, sat there ready to go. It needs to be paid to drawn out. And really that provides, in our view, the need for the price to be higher, and hence then we don't see it being something temporary. It's also, I should touch on, and I'll touch on this a bit later as well, that while we do see the global stocks starting to decline, it also means that stocks are less comfortable, and it also means there is more scope for volatility. So, as we go forward, the sort of low, we saw that 2018-19, a very flat sort of price. Going forward, we see some more dips and troughs, etc. Now, in terms of, I guess the sort of more current headlines that we've been seeing, we've seen a lot of support coming through from the Thai crop. Now, this chart was what we were talking about probably 6 months ago. We were thinking, well, there's a bit of dip in the Thai crop there, that's contributing to the deficit. But actually, it's been a lot worse than we thought. And the drought there has really, really bitten, the market. So if that there was the orange bar previously, now that's the orange bar now, down about 36%. And it's the significance of where Thailand is, I guess, that has made this such a big problem. Because Thailand sits well within, right in the center of that Asian consumption sort of region, huge consuming nation. And the fact that Thailand's not producing so much suddenly, raises questions over where those supplies will come from. It's particularly been prevalent in the white sugar market, and really that's where we've seen the growth, the support coming from. It's been suddenly a lot of support for white sugar, drawing then raw sugar up, that's what we see. Obviously, Thailand being a big exporter of whites. And of course, now the market it doesn't have that Thai sugar. Those Asian consuming nations will need to look to Brazil, they'll need to look to India, and they'll need to pay to draw sugar from those regions. So that takes me on, I guess, to the price forecast. So what we see going forward. And really, I mean, that's the price forecast. That's what we see going out into the next 12 months. And you probably think, it's not very volatile. It's just a bit flat. It's a bit sort of underwhelming. But there's a few things at play there. I should emphasize that our forecast is for sort of 470, about 470 in the first 3 quarters of this year, and then creeping up to 475 towards the end of the year. Now, that's an average quarterly price. So if you sold a little bit of sugar every day over the quarter, our expectation would be average 470. That doesn't take into account this volatility that we'll get, these ups and downs, etc. A few things at play with this forecast. When we look at the ICE 11 on the top line there, you'll see that that's where we are a little bit bearish. And I'll get into that on the next slide. But where we see the support coming through is in the Aussie dollar. So we see some Aussie dollar depreciation in the 12-month period, falling down to like 0.65, which somewhat offsets the impact of the ICE 11, and that delivers that sort of price around 470 to 475. And so then looking at the ICE 11, why we are slightly bearish on this market is, well, we can line them all up using this slide. We start really Q1, we've got the Thai drought, we're learning more about that all the time, and that's expected to meet the headlines in the next few weeks still. We've also had the speculators at play, it's been, which has been very, very good for driving the price up. But as we get into Q2, we start to see actually things change, and potentially that could start to change sentiment. The Brazilian harvest will come on. There is incentives there for more sugar production. And that's what we see, more sugar coming through. Also in Q2, we'll start to know a little bit more about the impact of coronavirus, particularly in China. Now, I could probably talk about that for another 15 minutes, so I will save that. But there is expected to be some negative impacts through coronavirus in Asia. In Q3, we're starting looking at a bit more depreciation in the Aussie dollar versus the US dollar, so that should be beneficial. But also in Q3, we'll be looking a little bit more at some Indian exports. They've been slow so far, and so into Q3, we'll expect them to be moving through a little bit quicker. And again, that puts a little bit of pressure there on the global price. And then in Q4, we'll start to know a bit more about the Indian harvest itself, and also we'll know what's happening here at home too. So a bit more knowledge, of course, around the what's happening on the supply side. You might notice, if you're eagle-eyed, that we are starting to get, we're going from sort of dark to light in terms of the colours on those boxes. So of course, as we move out to Q4 and further, it becomes a little bit more grey in terms of our forecasting. And then Q1 2021, we see the Asia harvest coming back in. We're expected to then know a little bit more about the impact of sugar taxation. Now, in the likes of Asia, that's really been sort of pushed through the sort of last year and particularly the end of last year. And so we're expected to know a little bit more of that impact then. And of course, who knows? By Q1 next year, I'm sure there'll be something else that we'll be talking about. So, in summary, then in terms of the parts of this presentation, really, well, we do see changing climate can bring more extreme weather and high temperatures here at home. But it's not all negative. That's the main thing. There is a balanced argument to this. And we do see Australian cane being very well placed versus competitors, both crops and competitors abroad, to adapt. And then in terms of the price side, we do see high domestic pricing. We see the highest domestic pricing, since March 2017. And not just speculation here. We do see fundamental reasons that the price needs to be higher and should remain so into the next 12 months or so, where we see the price averaging around 470 to 475 by Q4. Lower, of course, than today's prices, but that doesn't take into account volatility. And that's where, of course, advantage can be taken. So that's kind of what I wanted to cover today. But, there's plenty there that I haven't covered, so I welcome any questions at all. So thank you.
Thank you. Very nicely presented, animated, very fast-paced. For those of you who couldn't keep up, we've live streamed it, so it'll be embedded on YouTube, and you can revisit that and review it, and also share it with your friends. So go there, subscribe, Project Catalyst on YouTube. Does anyone have any questions for Charlie?
Yes, it should do. So that,
Free trade.
And also Indonesia has so we're competing with the free trade agreement. We have similar tariffs to the likes of sort of Thailand, India, etc. But also, we've seen Indonesia looking at increasing imports, substantially this year. And really, when we're looking at who that's going to come from, it's going to be the real beneficiaries will be Australia here, it will be Brazil, and in our view, India. So. It's kind of a double-edged sword. We saw that the imports, their expectations for imports to increase, but also that they have now reduced the standard of sugar or the colour of sugar from India. So which means that now India they did have sort of favourable rates, but they were limited by those specifications in colour, and so we will be competing with those Indian exports to some degree. But Indonesia has been and will remain a really big customer of Australia, which is really, really good news.
Anyone else? I think we're just shouting out questions now. Thanks, Brian Granshaw. The only problem with that is other people can't hear the question. Luckily, Charlie, you did. So is that it? I can't believe it. Charlie presented an extensive amount of knowledge on the commodity analysis. Is there anything else? Last chance? These guys just want to go to the bar, I'm sure. You were right, Charlie. You were definitely right.
Yeah.
Give him a big round of applause.